Well, it's great to be here. It's a great topic. Ed, you're dead wrong. Let's talk about this. This whole scheme, it's a scheme. It's a home ownership deception scheme. After the high-tech bust, Wall Street was looking for the next best thing. What was the most valuable asset in the world? Was it gold? Was it silver? Was it oil? Or was it American real estate? Because American real estate would never go down in value across the board. So you have investors out there who are willing to invest in mortgage-backed securities in American real estate. So what was the problem? They needed the buyers. They needed the borrowers. So what did Wall Street and these banks do? They went out and they found the borrowers, and they targeted the most vulnerable. And they say, you can achieve the American dream. You can get these mortgages that were affordable initially, and they created these products that were never meant around home ownership. It was meant around generating massive profits for Wall Street. So they created these products, interest-only, negative AM, products that were structured to fail. That's what they did. It's a brilliant scheme. It was never around home ownership, because if you are a working person, if you are a minority home buyer, and you have an opportunity to purchase a home which you could never have dreamed of before in a safe area with a good school system, and the biggest institutions in the government was out there to say it's the right thing to do, you were going to do that. And people were making their mortgage payments. Because look at this one date, February of 2008. February of 2008. What happened then when this thing came to the public light? It wasn't that we had a crisis before that. It wasn't that we had new home buyers. It's because mortgage payments were doubling and tripling. So people could afford those mortgages. But when you go from a $500 or you go from a $1,000 a month mortgage payment to a $2,000 or $3,000 mortgage payment, the inevitable result is massive numbers of people are going to lose their home. So what happened? It's a government failure. It's a government failure. This administration has done virtually nothing to help the homeowners. So let's go through that list. Before President Obama took office, he had the opportunity to support a foreclosure moratorium. He consciously went behind the scenes in Congress to prevent that from happening. Number two, the TARP program has over $30 billion. Virtually none of it was spent for the homeowners out there. Three, he put industry in charge of this mortgage crisis. Tim Geithner, Larry Summers, and I would argue Eric Holder, because I would argue that not one person has been prosecuted for these crimes. Until you start to prosecute people for the crimes, then it's not going to change. And you just go through the HARP, the remodification programs, all those things have not worked. And as a result, millions of homeowners have lost their homes when they shouldn't have lost their homes, because we should have had a massive modification program out there. It did not work. Now let's talk about wealth, and to Ed's idea, which is an interesting idea, but what created wealth in this country, and particularly for the white suburban communities? It was VA loans after World War II. Now, if one was minority, you couldn't even get access to those VA mortgages. It wasn't like the veterans coming back had great wealth. It wasn't like they were, had reaccumulated all those assets. It's because they had access to the VA mortgage, no down payment, full doc underwriting. And that's what generated huge amounts of wealth for white homeowners, particularly in the suburbs. So now we are where we are now. And you look at that, and what is this administration doing? They're saying, at first, you need 10 to 20% down payment. Well, why is that? You didn't need that when it was white home buyers after World War II trying to get a mortgage. But all of a sudden, we hear from our liberal friends, as well as from the administration and others, you have to have investment. You have to have skin in the game. Well, working people have skin in the game when you do full doc underwriting and you work hard. You don't need a down payment to do that. Well, is there a model that shows that that works? Well, at NACA, we have $13 billion, $13 billion of one product. So if I was to ask you and say, if there is a product out there that's no down payment, no closing costs, no fees, at a 30-year fixed affordable rate, today is 3.875, and we don't look at people's credit score, and the average credit score is 620 or less, what would you say? Would you say that was a mortgage that is structured to fail, or would it be a successful mortgage? The fact is we have the lowest default rate in the industry. So if you do it the right way and you respect working people out there, it gets done. And that's the model. The model is go back to what happened after World War II with VA mortgages and say we need to stabilize our communities by providing that mortgage and similar mortgage. Yes, they're QM mortgages because, you have an affordable debt ratio, you're looking at people's individual circumstances. That's part of the answer out there. Now let's talk about some of the other things. When we talk about Fannie and Freddie, yes, the legislation out there is important, but it's almost irrelevant because Fannie and Freddie are out of the mortgage business for low and moderate income people. They're not lending. The average Fannie and Freddie credit score is 620 and higher out there. So you cannot, and the down payment requires, they have really eliminated the opportunity for low and moderate income people to purchase homes. So we and CFPB, the regulations, they've over-regulated the mortgage industry. And the banks are not being regulated. I used to be a regulator. Used to be that the banks would pay attention to the regulators out there and that they would start doing some kind of lending when they're required to do that. This administration is not pushing these banks to be accountable, to do lending, and it's really a disaster out there. And if you're going to predict what's going to happen in the future over the next 12 months, going to predict that, people say that the economy is growing because of one thing: the housing market is growing, and that's bringing along the economy. The reality is the opposite. The housing market is starting to drag down the economy because the investors have made their deals. They've cherry-picked the properties out there. They're no longer out there buying, and actually they're starting to sell some of those properties. Low and moderate income people cannot get financing to get a mortgage. Its only deal out there is FHA, and that's not changing, and FHA is getting more and more expensive. So the fact of the matter is we've got to change the policy now because the banks aren't lending, the government is too restrictive out there, the regulations are overbearing, and we're heading down a road where prices are going to start going down again, and it's going to be another mortgage crisis. And we've got to get this administration, and we have to call it for what it is. Because of this administration, we've had one of the most significant wealth reductions for the minority community and low and moderate income communities. And not just look at housing, you can look at student debts and across the board. And we've got to hold them accountable and saying, you could not have gotten away with this if it was done by a Republican, if it was done by a conservative. The only reason that people have been able to get away with this is that we're reluctant to criticize this administration, but we have to stand up and doing it because minority homeowners and home buyers and people are getting the short end, to say it in a nice way, and reduction in wealth. Thank you.
Thank you, Bruce.